Morning, guys. It's Thursday, September 25th, 5:24 a.m. Central Time. Grain markets are higher this morning. December corn futures up 2 cents at 426 and a quarter. November soybeans up 6.5 at 1015 and a half. December Chicago wheat up 2.5 cents at 522. December Kansas City wheat up 2 3/4 at 509 and a half. December spring wheat up 3 cents at 570 3/4. More news out of Argentina this morning.
So, the U.S. plans to provide Argentina with a $20 billion swap line and is prepared to purchase the country's foreign bonds to stabilize the peso and restore investor confidence ahead of the midterm elections. While the terms of the deal are still being negotiated, the announcement boosted the peso and lifted Argentine bonds and stocks. The support could help Argentina rebuild reserves and move toward a more flexible exchange rate. However, economists emphasize that lasting stability will require deeper reforms. Analysts also caution that Argentina's history of defaults poses repayment risks for the U.S.
Let's talk about what a swap line is. To put this very simply, in the case of this swap line, the United States is going to give Argentina $20 billion. In exchange, Argentina will give the United States the same value in its own currency, which is the peso. Eventually, Argentina is going to have to swap back the currencies. They're going to have to return the dollars plus some interest. The U.S. will return the pesos to Argentina. So the U.S. assumes quite a bit of currency risk through this transaction. Here is a chart of the U.S. dollar versus the Argentina peso. The peso has lost more than 30% of its value versus the U.S. dollar just since the beginning of the year. So we're taking on a little bit of currency risk here, certainly in order to help Argentina to work its way out of its financial woes. And they've got all sorts of problems. Argentina last night, to get back into the grain side of this, Argentina reapplied the export taxes that it had suspended. And the reason that they reapplied the taxes is not because of the swap or because anything that the United States did. It's because they hit the cap that they imposed on themselves. They said if we hit $7 billion in export sales of commodities, corn, soybeans, whatever, we're gonna reapply the taxes, and they hit it. China bought at least 30 cargoes of Argentina soybeans within 2 days following the suspension. That's 35 cargoes, 2.3 million metric tons, 84 million bushels of soybean business that would have undoubtedly come to the United States if not for the tariffs and the trade war. Now, where this gets a little bit more, let's go to this first. Here is a statement regarding this whole situation from the American Soybean Association. U.S. soybean farmers have been clear for months. The administration needs to secure a trade deal with China. China is the world's largest soybean customer and typically our top export market. The U.S. has made zero sales to China in this new crop marketing year due to 20% retaliatory tariffs imposed by China in response to U.S. tariffs. This has allowed other exporters, Brazil and now Argentina, to capture our market at the direct expense of U.S. farmers. The frustration is overwhelming. U.S. soybean prices are falling, harvest is underway, and farmers read headlines not about securing a trade agreement with China, but that the U.S. government is extending $20 billion in economic support to Argentina while that country drops its soybean export sales tax to sell 20 shiploads of Argentina soybeans to China in just 2 days. It's incredibly frustrating. You want to be more frustrated? Here's Scott. Where did my damn Scott Bessent slide go? Here it is. Here's Scott Bessent last night with Argentina President Javier Milei at what Bloomberg calls a posh gala in New York. Bessent said this: "Tonight we recognize President Javier Milei for his tireless efforts to make Argentina great again." This is incredibly, incredibly frustrating. I think that the time for just strongly worded letters to this administration has passed, and I think it's time for more severe action. I know you guys who are listening, we've got mostly farmers as our crowd, and we've got a lot of tourists, as I call them, in here lately. But guys, if you voted for Trump, and I know a lot of you did, and I don't care who you voted for, you can't just like have undying loyalty to the administration. You have to hold them to account. The Trump administration campaigned on this golden era of agriculture. We're going to strike all these trade deals. We're going to do all this business. Where the hell is it? We are past the time now where these strongly worded letters is all we're going to do. I don't know what the action is that needs to be taken. That's beyond my pay grade. But those of you guys who are involved in these lobbies, whether it's corn growers, soybean growers, whoever it is, I mean, I think you've got to take more severe action here because this thing is starting to look very, very bad optically and it's very, very bad from just a simple dollar and cents standpoint. As I've talked about before, we're into harvest season now. Farmers are harvesting corn and soybean crops that are losing money, and a lot of it has to do with this trade war. It's a bad deal, and the fact that we're going out of our way to help one of our big competitors on the export market is not a good look. We're going to get a lot of hate mail from that from both sides, and that's cool. But I mean, you should be able to, if you can't criticize who you voted for and hold them to account, you've got a problem, and you need to reevaluate your views.
China mentioned the U.S. and soybean trade in a press conference today. A Commerce Ministry spokesperson told reporters with regard to the trade of soybeans that the U.S. should take action to cancel its tariffs in order to expand trade. Chinese trade negotiator Li Changgang met with U.S. political and business leaders in Beijing earlier this week. China, of course, has yet to purchase any U.S. soybeans for current marketing year delivery.
So, I mean, shocking news, right? China isn't buying beans because of the tariffs. But I think like what the way I read it was, hey, if you drop the tariffs, maybe we'll buy some soybeans. So, I mean, that would be cool, but I don't think that's the way the administration is leaning right now. Trump seems to have his heels dug in for this trade war.
The National Corn Growers Association has created a task force to identify ways to improve farm profitability. The task force will also explore options to reduce production costs to better align with today's commodity prices. Farmers are facing their third straight year of negative returns, with a fourth projected in 2026. Since peaking back in 2022, average production costs have fallen only 3%, while corn prices have dropped more than 50%. Meanwhile, bills in both the House and Senate to authorize year-round E15 sales remain stalled in committee, with little progress expected as Congress focuses on other priorities.
The trade war, of course, is a problem. I think this is the bigger problem, is that we've seen such a drastic inflation in production costs. And I don't know if National Corn Growers is actually going to gain any traction here. I hope that they do. I think there's a lot of things that could be done. They could do some sort of investigation into antitrust stuff and monopolies with the fertilizer companies and the seed companies. There's a lot of different things that could be done. National Corn Growers had this excellent chart. This is from Krista Swanson at National Corn Growers made this, and it's fantastic. Production cost is just way too damn high, and this is a big part of the problem. If this was pre-COVID times and we had D's corn at 4.25, a lot of you guys would probably be able to make some money. And because it's post-COVID times, and because we've seen this massive inflation as a result of a million different things, it's very difficult for farmers to turn a profit right now.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
Matt Bennett was on yesterday. We did 20 questions with Matt Bennett. We do this every other Wednesday. Do we really hate accumulators and other grain marketing related items? The accumulator contract as it relates to 2026 corn bushels is something that has become popular, and we discussed this. Do we really hate them? Yeah, kind of, but there's some details that you should be aware of. We did cost of storage with Chris Barron on Tuesday, and Chris made some free tools available. You really need to understand the expenses involved in holding unpriced grain, whether it's in your own bins or at a commercial facility. There's a lot that goes into it, and the way that Chris does it is absolutely fantastic, and it works in the real world. He spits you out numbers, and we made tools available, like how much does it cost you on a per day basis, per day, per bushel, cents per bushel, or on a per week basis, on a per month basis. Actually spits you out dollar signs and per cents per bushel numbers. It's really interesting stuff. And if you're not calculating that stuff, you're doing it wrong. If you want to see the premium stuff, guys, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. We don't want to sell you brokerage services or seed or fertilizer or crop insurance. We just want to sell you a bunch of content that we send out every single business day. Give that deal a shot.
Regulators are preparing to scrap the $25,000 minimum equity rule for pattern day trading. The Financial Industry Regulatory Authority has approved amendments that would replace the threshold, making day trading more accessible to smaller investors. The change is pending approval from the SEC. The existing rule, established back in 2001, requires traders to maintain at least $25,000 in a margin account to execute 4 or more day trades within 5 business days. The threshold will be replaced with an intraday margin rule, linking buying power to a trader's positions throughout the day instead of a fixed account minimum.
Okay, so this news applies to people who trade equities. This is a stock market thing. up until this point, and it looks like they're going to scrap this. If you wanted to be a day trader in the stock market and you wanted to do it on margin, you had to have this $25,000 minimum in your account. Now, for those of you guys who are trading futures, and you guys are probably more familiar with that, our crowd is at least, it's always been a margin mechanism. You only have to post a very small portion of the full contract value to control it, either long or short. Day traders lose money, guys. They lose money. I've been in the brokerage business for 20 years, and day traders, they lose money. I don't care if they're retail. I don't care if they're professional. They ultimately lose money. It's a very, very small percentage that ends up being profitable. Is day trading a good idea? I pulled some results of some studies, and I think it's actually more people than what these studies would indicate lose money. A study in Taiwan found that only 20% were profitable and less than 1% earned consistent, sustainable profits. SEC data from the 2010s estimated that 70 to 80% of day traders lose money over time. I think it's way higher than that. A Brazilian study said that 97% lost money. Only 1% made more than the Brazilian minimum wage from trading. North American brokerage data often cited that between 75 and 90% of retail accounts lose money in leverage trading. I think that this whole push in the United States towards like more trading, legalized gambling, it's a cancer on society is what it is. Now, the libertarian in me says that, hey, if you got a whole bunch of money and you want to go blow it trading, stock futures, then go ahead and knock yourself out. But it's a bad idea. Don't do it.
U.S. ethanol production declined last week. Weekly output fell to 1.02 million barrels per day, down 2.9% compared to the prior week and down 2.4% versus the same week last year. Ethanol stocks rose to 23.5 million barrels. The print was up 3.8% compared to the previous week, but down 1.3% compared to the same week last year. According to Reuters data, U.S. ethanol margins remain strong.
Ethanol production's great. Here's the problem. Not the problem, but production's great. We're running a couple percentage points ahead of where we were last year in terms of ethanol production. The issue is that USDA is projecting corn demand via ethanol to increase 3% versus the most recent marketing year that ended at the end of August. And that may be a tough achievement. Some people believe that USDA is overstating corn demand in its new crop balance sheet. And, it's just, they're all predictions and guesses at this point, but you're going to need to see a really strong pace to hit that USDA production estimate. Stocks rising, which is not necessarily a positive.
USDA reported multiple flash sales yesterday. U.S. exporters sold 101,400 metric tons of soybean cake and meal to Guatemala for delivery during the current marketing year. Exporters also sold 12 million bushels of corn to Mexico for delivery during the current marketing year.
Great. There's nothing wrong with the corn program. It's fantastic. Soybean meal, we should be selling probably even more of it, and soybean flash sales remain largely absent. What did cattle do yesterday?
Cattle futures were lower. Live cattle were $1.50 to $2.20 lower. Feeders were $2.50 to $4.10 lower, with the exception of the front month contract, which gained 52 cents. Box beef prices continued their seasonal decline. Choice was down $3.41 at $3.77.39, and Select was down $3.48 at $3.56.42.
Outside markets are quiet this morning. Guys, have a great day. We'll be back on Friday.